This holiday season, we're helping you catch up on all your favorite FreightWaves TV shows. You can now watch the latest freight news, market insights, and in-depth discussions on your preferred streaming platform. As our gift to you, if you purchase a FreightWaves Live Atlanta ticket from now through December 18th, you'll receive a free Apple TV 4K. Download the FreightWaves TV app today and you'll see freight has never looked this good.
Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith and we have an all-star lineup for you today. We have Luke Falasca talking to the brokers. We have John Kingston back again giving us an oil update. But first, a word from the man himself, Dean Croke, on a carrier update sponsored by Powerfleet.
Hi, welcome to our update today. Today I want to talk a little bit about some of the challenges carriers and drivers face this time of the year. Out on the West Coast today, if you have a look at some of the markets we're talking about over here, a lot of drivers get stranded over there this time of the year, and in particular for dispatchers, it's the most difficult time of the year to get drivers home. A lot of drivers will prefer to run during Thanksgiving and make up the miles and the extra pay, but during Christmas, it's a time of the year when drivers have to get home. So what they're looking for is loads that get them back to the East Coast. So I wanted to talk a little bit about drivers that are out on the West Coast today and sort of stuck for loads. Today's Wednesday. Today's about the time they need to be loading back towards the East Coast in particular. If we think about some of these markets here, this is the Fresno market, up through Salinas here. This is where most of the summer produce comes from. About 75% of our produce is grown in this region during the summer. But during the winter months, the produce season kind of shifts further to the south, down here around the Mexicali border area and the Yuma area and the Quechua Valley. So up through here, there's a lot of produce that comes out of these regions today. In fact, the winter salad bowl is about 90% of our leafy green production comes out of this area here. And when it's at its peak production, these 9 factories produce around 450 truckloads of leafy green lettuce every day, in particular romaine and iceberg lettuce. So there's quite a lot of volume that comes out of here every day. So if carriers are willing to deadhead the 3 to 5 hours it takes down here, there's quite a lot of volume that comes out of here every day that needs to head back to the East Coast. So from a rate perspective, in terms of why you would do that, if you have a look at some of the freight volumes relative to the time of year, you can see this time last year, freight rates were really high. This is November, December last year when a lot of the volume starts to move out of that market. Capacity was much tighter. So what's happening now though, this time of the year, truckload rates out of the West Coast to the East Coast are off about 30%. And what's interesting is that most of the markets are down. JFK, Boston, Atlanta, Chicago is the only one though where rates are going up. So there's more rates to go on the Chicago lanes. If you're a carrier in the Yuma market today and you're looking for freight, it might take a couple of moves to get back to the East Coast rather than looking for that one long haul. But most of the lanes today, according to our USDA truckload data, most of the lanes are down about 5% in terms of revenue this week. Chicago is up 4% though. But most of the lanes are running at around $2.40 to $2.45 a mile out of the West Coast to the East Coast. So it's worth that deadhead across the Yuma Valley, the Quechua Valley, to run up through Phoenix and back across the 40 to the East Coast. So that's what's happening on the over that side of the country. What I wanted to do was talk a little bit about this particular market here of Ontario. It's one of the biggest freight markets in the country, and if you have a look at where capacity is today as we measure by our outbound tender reject index, you can see here that there's a little bit of an uptick here. Carriers are rejecting around 12% of the loads today. Accepting around 80%, 88% of the loads means that there is some upward pressure on spot rates in the market this morning as carriers are looking to get home. So there is some tightness in the market from a rate perspective. The truckload rates here I would expect would start to increase a little bit this week as shippers are more desperate to get those loads moved. So I think if I'm a carrier today, I'm sitting in the Ontario market, which has got 3 components. One is the Inland Empire dry van freight market. Further to the south though on the Ontario market, that's where more of the refrigerated freight is going to be available. So carriers that are sitting in the San Diego market this morning, there's quite a lot of freight if they want to run across the I-8 to the Yuma Valley area and start to look for those loads back to the other side of the country. So let's switch gears a little bit now. Last night was one of the big occasions in our industry. Carriers are no doubt aware of the change from the ELD mandate that was grandfathered in, where carriers were allowed 2 years to switch from the AOBRDs over to the ELD requirements. So as of December the 17th, all carriers had to be 100% compliant with the new hours of service regulation as per the ELD mandate. That's now in effect. What's fascinating with the data, when we look in our sonar chart, we can see here that this was the soft mandate that came in December 17. You can see that there was a little bit of an impact on hours of service violations as it relates to the hours of service regulation. But this is the hard mandate here. And this is when the enforcement on the side of the road was actually much more vigilant. Carriers weren't given the grace period. They had to be compliant and have the telematics device in their vehicle. What's fascinating is that since then, there's been a drop of about 42% in the hours of service violations in the market. So that's what's happening in the market today. The other really big news, if you're in the market for a used truck, now would be the time to be thinking about older trucks, because there has been a significant drop off in price, all in the 14, 26, 29% range in used truck prices. Great time to be buying truck if you're in the market.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke, back bringing you another broker update for today. We've got a lot of good stuff, so let's jump right in. All right, so on this chart behind us, we have in blue the outbound tender volume levels in the United States since about late February. So as you can see, we've seen a couple of dips there around the holidays. For the most part, volume levels are still really high. We've gone up a lot for the most part. We're already encroaching back up around November, or the Thanksgiving high, where volume levels were. Now, what's most interesting though is this purple line. That is the outbound tender rejection percentage over the same period of time. So since about February, we've seen here around February, it looks like was the highest point in the year. We were sitting a little under 8%. We've gone down, seen a couple of ups and downs throughout the year, but look at this massive spike we've seen. So right about here was where Thanksgiving was, then we dropped down, and then we've just blown right past that. So we have hit a new high this year for tender rejections, or at least since the very beginning of January this year. We're sitting at just under 9.5%. That is so incredibly high. Haven't seen that level at all this year. That's going to apply a lot of upward pressure on spot market pricing. So we're going to take a look at a couple markets and see how that's affecting them. But before we do, I want to bring your attention to this map. I showed this earlier this week. This is a great opportunity to use this information here to figure out where to target your sales calls for today. So what you're looking at here, the colors, so in blue or red, represent where capacity is tightening. So the darker the red means you have more capacity to source from. That's a 7-day average. So the darker the red means over the last 7 days, capacity has begun to tighten. The darker the blue means that capacity is beginning to tighten over the last 7 days. Sorry, red is where capacity is loosening. Blue is where capacity is tightening. So if you're looking at any of these areas, moving freight out of these areas, like say, you got Salt Lake City there in blue, a lot of these areas in Texas in blue, right? Some areas there in the northern Midwest parts in blue. That means that that capacity is tightening. So you have less capacity to move your freight versus these red markets are beginning to tighten. And the height of the map represents how much market share they have. So if you're looking over here in Atlanta, that massive market has a lot of outbound volume right now. So if you're looking to target some sales calls today to pick up a little bit extra freight, I would focus on the areas that are both blue and have a lot of height on them. So Phoenix right now, typically a backhaul market, but it has seen an increase in tightening in capacity, as well as has a lot of volume. Salt Lake City, some of these areas in Texas, right there in the Indiana markets, Michigan. Focus on a few of those areas for your sales calls today, and you might have a little bit extra luck. Also, honing in on the Twin Falls, Idaho market. Not the biggest market in the country, but certainly seeing a lot of movement right now, especially in the reefer outbound rejections. So right here on this chart, the blue line is the overall outbound tender rejection. So we just hit a new high at about a little over 20%. We've already blown past November's numbers. The orange line is the van outbound tender rejections, while the reefer line is in green there. So we've already hit 40. Right here was where we were with Thanksgiving. So we've already blown past that. So if you're moving any freight in those areas, be sure to increase your spot bids well above where they were before, well above contracted rates, and you should see some pretty good returns. I'm Luke, and that's your broker update for today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
John Kingston. I'm here to talk about oil, but I did want to follow up on something my colleague Dean Croke said. He talked about used truck prices. The podcast that I host, Drilling Deep, we talk about used truck prices today with an industry expert. You can find that on FreightWaves.com. So, want to talk about the diesel market. It's a little bit schizophrenic right now. We've got a situation where the overall price of diesel continues to rise. The CME price of ultra-low sulfur diesel settled yesterday at above $2 a gallon. That's the second day in a row it did it. That's the first time since May that it settled above that 2 days in a row. And you can see that this rise in the wholesale rack price for ultra-low sulfur diesel has come off this early December low up to the current level. Part of that is the fact that crude is definitely higher, but it's not all crude, because on the commodity exchanges, the price of ULSD compared to crude has risen. So this is the general trend in the market. At the same time, you have sort of sub-markets all around. You've got physical markets in several different parts of the country, the Gulf Coast, the Atlantic Coast, but we're going to talk about Chicago. The spread of Chicago diesel against that price on the CME has plummeted. We mentioned that yesterday. It took another 4-cent drop yesterday. There's no real apparent reason for this. There's no particular flood of new imports. Nobody's really sure. There's not really been a demand increase. You know, that market is not that big, and as a result of that, sometimes it doesn't take a lot to move it. But it's moved about 10 cents relative to that CME price in about just about a week. So if you've got trucks in the Chicago market, you know, you're not going to move trucks into Chicago just to fill up. But when you're looking over all your fuel expenditures over the next week, you may see that you got a little break in the Chicago area, and it's not just Chicago. That Chicago price will set the basis for Indiana, for Wisconsin, for Iowa, and the rest of Illinois too. Speaking of markets and what they're doing, kind of individual markets, as we all know, the price of diesel in California has always been significantly higher than the rest of the country. I wanted to note that this is the Department of Energy EIA weekly retail diesel average for California. Yesterday, we showed the price for the nation. This is for California. The fuel surcharges for everything that's not California will be done against a national average usually. But California, if you're running a lot of trucks in there and you've got you're using a fuel surcharge, you're going to use that California price since it's so much higher. You could see what's happened to it just like in the last 4 to 5 weeks. It's plummeted from about over $4 down to $3.88. That's significant. That's 12 cents a gallon. Also assume that even if you're an independent owner-operator and you are not using a fuel surcharge, you've got kind of a nice break here. So this is what's going on in California. It's still a lot higher than the rest of the country. It's always going to be a lot higher than the rest of the country for a variety of reasons, but certainly this is good news for truckers. Finally, I wanted to talk about something that happened in Washington. Obviously, this is not a chart. This is a headline on FreightWaves.com, written by my colleague Alan Adler. There was a bill a large spending bill that was passed in the House yesterday that included the revival of the biodiesel credit. There have been a lot of biodiesel plants that have shut down because the future of the credit was unclear. Now it's going to be clear. It's probably going to be revived if it survives through. And you know, a lot of people talk about biodiesel. How much cheaper is it going to be? I think that you can, from a perspective of somebody who uses it, I wouldn't worry about that much. The real key here is that it's supply. There are times in some blends where they'll burn like 20% biodiesel into the rest of the blend. So this is going to be more supply. And if you're a buyer of diesel, more supply is always good. That's really all you need to know. More supply is good if you're a buyer. So anyway, follow this. It's going to for the final resolution in the spending bill. But this is good news. For FreightWaves Now, I'm John Kingston.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.
And that's going to do it for this Wednesday edition of FreightWaves Now, but the fun doesn't stop here. We're available on all your favorite social media platforms, and we recently launched our FreightWaves TV app. So we're available in the Apple Marketplace as well, including Apple TV. Be sure to check us out, and we'll see you there on the next episode. Thanks for tuning in.
In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.